Hello everyone and welcome back. My name is Greg Furman and these are the market positions for December the 12th, 2017. Now our first trade for tonight is going to be in the Forex market. We're looking at the US dollar Japanese yen. Now as per this week's Forex Weekly Outlook, I've talked extensively about the dollar yen, about this range trade between 111.30 and this 114.60 area. Now we are advancing higher. We've got a key level of 112.60, but it's also been my opinion that this is probably a classic case of buy the rumor, sell the fact when it comes to the Federal Reserve, which is the release is slated for this Wednesday. So what we're looking for is to sell into the top of this particular range, but we do need an indicator from VantagePoint to help us confirm this. So when we look at this, yes, we do have a fresh triple EMA cross, but we've moved a considerable distance from 112.61. Our neural index is still higher, but we can see here that our medium-term predicted difference is crossing over the long-term predicted difference as the market is moving higher. So as the market is moving higher, the VantagePoint software is saying the medium-term uptrend is weakening against the longer-term uptrend. We're also moving into a heavily overbought condition. We can see that when we've moved up into this area before, that has led to a failure at these upper levels. So we're looking to continue to play this particular pattern that we've seen in the market for a considerable period of time. When we look at the dollar yen over the last year as we move into the year end here, very little has changed here. We have basically been playing this range between the bigger, broader range that we've been playing has been essentially between 107 and at or about the 115, 116 area. So again, guys, not much has changed in this particular setup. With the equity markets as high as they are, the dollar yen is still not been able to crack the 115 level in the latter part of the third and fourth quarter. So again, we look at these factors and we bring fundamentals into this, and then we look for that needle in a haystack from VantagePoint to tell us that this strong move up off the bottom part of this range is just more of the same. So with that medium term predicted difference giving us that signal, then we go to the daily report. The daily report is very important here. So when we look at tomorrow's high, 113.85 to 113.42. Now I believe it's going to be a little wider than this. I believe we could push a little bit higher, maybe even towards the 114, but ultimately I feel we are also moving back towards this 112.60 area. So at this time of year, I cannot stress enough, as I've done for my own direct clients, to limit your trade. This is a high risk short trade, but again, it's not a blind guessing at saying, okay, I'm going to buy the bottom of the range, I'm going to sell the top of the range. It's more to it than that, guys. We're looking for something internally in the software based around the correlation to 31 other markets to tell us that this uptrend may not be what it appears to be. So all stops on this particular trade here, guys, must be above, in my respectful opinion, 115. We never put stops at the near a range top. That range top is 114.60, so we have to have stops above that. We also never ever, with dollar yen or certain pairs, want to put our stops on round numbers like 115, 114, 116. We want to make sure it's just slightly above that, even by 5 or 10 pips to protect us. So that is the play here, and again, a very high risk short trade. Now that's our first trade for tonight. Now our second trade for tonight is going to be in the US technology sector. I'll admit I do like the tech sector usually around Christmas time. So we're looking at the HP-HPQ stock. Now what we can assess here is we're getting into a pretty tight wedge formation, a classic technical formation here. Now looking at the VantagePoint indicators, our key level here, we're just going to take this off here. Give me 1 second so I can readjust this here to look at our critical level, VantagePoint levels. Now 2128, that is our key level, our 18-day predicted moving average. We can see that we're closing at 2130. That in itself is bullish. We've got our neural index Forex higher. We've got our medium term crossing over our long-term predicted difference to the upside. That's a favorable. Now our predicted MACD is holding the zero line, a little tricky here, but we're at 52.5, suggesting that this move lower was corrective in nature and we're starting to turn back to the primary uptrend. Now, when we look at in this case, the individual crossovers, our short term is crossing over back to the upside off of this known trend line support. Our medium term is still down and our long term is still down, but if we can push through this channel, we should see a bigger move, looking at these indicators from VantagePoint warning us a couple of days out that a bigger move potentially could be coming. So from here, guys, all we have to do is go into that all-important daily report with that close of 21.30. We're looking for a minor pullback to 21.10. We then target 21.39. Now, stops in this particular case should be below 20.50, this swing low. Now, ultimately, we're looking for a move back up here towards 22.50. That's the idea here, guys. So we'll keep our stops relatively tight, but ultimately, I feel we should be able to push higher given the time of year. So with that said, these are the market positions for December the 12th, 2017.